Well, let's invite our next guest first with this question. Not the most important question, but still important for people who are invested in these kinds of stocks. Ajay Bodke of Prabhudas Lilladher is our guest. Good morning to you, Ajay. You know, we've got a bunch of PSU bank numbers which are terrible to say the least. You know, Corporation Bank, Dena Bank and now Punjab Sindh Bank. Minorly better for maybe Andhra Bank and Central Bank, but even then very elevated NPLs of 5.5% and 6%. Do you think the market will be in a mood to ignore these micros and simply keep steamrolling the Bank Nifty and the PSU Bank Nifty higher?
I think the rise that one has seen in the banking sector and the capital goods sector is entirely predicated upon an expectation that a decisive mandate will be returned by the electorate on the 16th. And that has been the underlying cause for the exuberance that one has seen in the PSU banks in particular. If, as you rightly said, one looks at and dissects the numbers, then clearly one comes to the conclusion that the problems of restructured assets and NPLs, we are not yet over the hump. And our view essentially is that it will take at least a quarter or two after a decisive government were to ascend to the throne in Delhi and were to put in place measures that will kickstart the economic growth, that one will start seeing some sort of normalcy returning to the PSU banking names. So it's all based on a hope, and I would be extremely worried in terms of jumping in and buying PSU banks. Our house view essentially has been to stick to some of the high quality private sector banks, and in that context Axis Bank and ICICI Bank and HDFC Bank are our preferred picks. In NBFC space, I think we are advocating looking at Shriram Transport. The stock has run up, but we still feel that it has some legs to go. So we would be very worried of advocating a jump right away in PSU banks. Selectively, we could possibly look at them on a case-to-case basis, but a simple view of taking PSU banks at the current elevated levels, I think one needs to advocate some amount of caution there, Lata.
Ajay, hi, good morning. So you did mention you mentioned Axis Bank and ICICI Bank from the frontliners. If there is a stronger than expected government formation, then what are the other stocks that you would recommend on the upside?
Yeah, I think some of these other cyclicals also have run up. And when I talk to some of the companies in the construction and capital goods sector, the sense that I essentially get is that the aggregate demand hasn't at the ground level seen any improvement, although we have seen a slew of approvals coming from the government to the CCI. And almost all of them are again hoping that the decisive mandate would lead to an change in sentiment, and the entrepreneurs, I think, who have got the project approvals, the revival of animal spirits will induce them into again start investing in the infrastructure sectors, and the revival of the moribund investment cycle is expected then to lead to some sort of improvement in aggregate demand for the construction companies. So I think Larsen & Toubro comes to mind as one of our top picks in the capital goods sector. We also are looking at Crompton Greaves with a medium-term perspective, although I must say that some of the mid-caps in the capital goods sector also, like the banking sector, have seen a sharp up move, and on a selective basis investors should get into these sectors. On the auto side, I think Motherson Sumi remains a top buy for us. We are looking at a medium-term call in Motherson Sumi. Improvement in both domestic business as well as in the European business essentially underpins our bullish call in Motherson Sumi. In the large cap space, I think Maruti Suzuki and Hero Motors is what we'd advocate. I must put in a word that El Nino effect and its impact on monsoons will also need to be factored in this entire exuberance that we have about the markets. And in the auto stocks in particular, the impact of any shortfall in monsoons needs to be factored in.
Okay. Ajay, you are in concurrence with the kind of levels Hemant is speaking about. Well, I guess you have to speak about scenarios now, but immediately what do you think the market can do even before the numbers come in on Friday?
I think the exit poll numbers will be watched very closely, and I think the market clearly seems to have discounted that a number of around 245, 250 for the NDA. Anything sort of above that, closer to the magic number of 272, I think will be greeted positively by the market. Although the rally that one saw on Friday clearly factors in to a large extent the fact that the NDA numbers would be close to the magical mark. But I think, any tally about 260 or 260, 265, I think can lead the Nifty to easily breach the 7,000 levels, and 7,200 levels possibly are possible. However, I think, as all of us know, it is a game of uncertainties, and in case we should hope for the best but prepare also for the worst, and hence we are advocating a judicious mix of defensives along with cyclicals. And the fact that, the global markets, the global economy is on an up move. We are expecting 3.6% growth for the global economy as per IMF. US is doing well. Hence, some of the frontline IT stocks and frontline pharma stocks, along with a few FMCG names, need to be part of your core portfolio. Along with some of these cyclicals that I mentioned in the banking and capital goods sector. So I think any mandate where NDA is around 230 to 35 levels, necessitating around 40-45 seats, and leading them scampering for the allies, and especially the mercurial three state governments of Bengal or Tamil Nadu or UP. The allies from there, I think could lead to a bout of volatility in the market. So I think we need to advocate caution and have a judicious mix, as I said, of frontline names like in defensives like Infosys, Wipro, Tech Mahindra in the large cap space. We are advocating Mindtree in the mid cap space, and Dr. Reddy's and Aurobindo Pharma in the frontline pharma, along with ITC, Britannia Industries, and Pidilite in the FMCG space.
Okay. We've seen some very disastrous PSU bank numbers, and as one JP Morgan note was pointing out, they've already risen 42%, factoring in probably a 6% GDP growth, which should be miraculous, even with a stable government in the current year. That's their analysis. What's your sense, Ajay? Should one just buy the bank Nifty, or would you outperform if you bought the private sector banks and do better than the bank Nifty?
Well, as I said, I think it's so very outcome dependent on what kind of mandate and what kind of decisive mandate comes in. But taking the fact that we have seen, as you said, around 40-45% rise in the PSU banking names from the bottom, I think a little bit of caution won't should be advocated. And let's stick to some of the frontline private sector banks, maybe Axis Bank, HDFC Bank. And I think I forgot last time to mention ING Bank. I think ING Bank is trading at 1.5 times FY16 price to book, 1.6 times FY15 price to book. We are expecting 25% earnings growth this year, followed by 23.5 or 24% earnings growth next financial year. Companies' ROEs are looking up. And the stock hasn't really performed as much as some of the other private sector banks. So I think there should be, if you are looking for a short-term to medium-term pop, I think ING Bank is what we're looking at. 700 rupees is our target price.